Hello, you are welcome to my accounting channel once again. For the purpose of those who are watching me for the first time, I want to introduce myself. My name is Daniel Amwakun. I'm an ACCA chartered accountant. I have provided accounting services such as bookkeeping and other accounting services, including teaching accounting for more than 20 years. Today, our lesson is preparing a trial balance or preparation of a trial balance. I don't want to waste your time. Let us go through the video immediately. As I said today, I've prepared this particular notes so that we go through these notes gradually, so that by the end of the day, you are able to understand what is a trial balance, and also preparing a trial balance will be very easy for you. Maybe previously you were having problems preparing a trial balance, but going through the notes gradually with you, at the end of the day, you will be able to understand a trial balance and also prepare it very easy. So let us go through the notes. So today's lesson is trial balance. The learning objectives. A, able to prepare a trial balance from set of accounts. B, explain why the debit and credit trial balance totals should be equal. C, explain why certain errors cannot prevent a trial balance from balancing. D, describe the use of a trial balance. So let us start. 1, the meaning of trial balance. Trial balance meaning. It is the compilation of all debits and credit balances after all the different accounts has been closed. So in accounting, when you prepare the ledger, you use transactions to prepare the ledger, and after preparing the ledger, you have to close the account. Then after closing the account, the balances that will remain in the account is called, or in the ledger, that's what you use to prepare the trial balance. Okay, 2, the double entry system rule says that. Before I go on, in accounting, the basic of accounting is the double entry system. The double entry system means that every transaction affects 2 accounts. There's one account giving out the cash and one account receiving the cash. So every account or every transaction should be recorded twice. So we don't have single entry in accounting. And because transactions are recorded twice, that's why we say a double entry system. So the account giving out the cash is credited and the account receiving the cash is debited. I have made a video on the double entry so that you can click on the link below and go and watch that video. The double entry system is the fundamental of accounting. If you are not grounded, if you don't know the double entry system, you can't be an accountant, because once your foundation is weak, like if you are building, you put up a building, if the foundation is weak, definitely the building will collapse. So applies that the double entry system, the foundation. If you don't understand the double entry system, then you cannot build on it, or you cannot be a good accountant. So you can go back and watch, click on the link video below so that you can go and watch my double entry video, which I've simplified, and I've gone through a lot of examples, because practice makes man perfect, so that you are really understand the double entry system. So as I said, the double entry system rule says that A, there are 2 sides of every transaction. B, every debit entry should have a corresponding credit entry. C, this means all the debit total should equal the credit total. Hence, the trial balance, which is the totals of the debits and the credit balances, should also balance. So what I want to say is that because every transaction has double effects. That's a double entry, one receiving and one giving. Then at the end of the day, when we enter all the transactions in the ledger and we close the books, then it means when we add up all the debits and we add up all the credit, it should balance, it should be equal, because the transactions has been recorded twice. Every credit entry has a corresponding. Every credit entry has a corresponding what? Debit entry. So once it's being recorded to us, then it means at the end of the day, when we add up all the debits and we add up all the credit, it should balance. Okay, let us go. The accounting equation that the asset is equal to liability or asset is equal to capital plus liability also confirms that the trial balance should always balance. Yes, that's the accounting equation. Please, I've made another video on the accounting equation so that you can also go and watch a particular video, or by all that I'm saying that all assets, because every transaction has two effects. One is giving and one is receiving. One can be an asset, one can be a capital. So once they are being recorded, then in short, all the assets, when we add up all the assets, it should be called the capital. Or when we have the assets, then we add the capital plus liabilities, then what? It should be balanced, confirming the double entry system and also the trial balance. So you can go and watch that particular video. Okay, let us look at an example. Example, record these transactions in Moscow accounting books, balance the accounts and prepare a trial balance. So these are the transactions, and the transaction, I will show you the double entry effects before we go on to the ledger. So A, May 2nd, Moscow started a business with $200,000 cash. So the double entry effect will be what? The cash account will be debited, and what? Capital account will be credited. The cash account is receiving the cash, so it has to be debited. And the capital account is what? Giving out the cash, so it had to be credited with what? The $2,000. That's the double entry. So you see, that is a single transaction, but it has what? Two effects: a cash account receiving the cash debited, and the capital account giving out the cash also credited. B, May 4th, bought goods on credit from Alaska Limited, $77,000 on credit. Well, for the double entry. The double entry is that purchases account should be debited and Alaska account should be credited. Purchases account is receiving the goods, so it should be what? Debited. And Alaska Limited is giving out the goods, so it should be what? Credited with the amount of what? $77,000. Okay. C, May 5th, sold goods on credit to Ponds Limited, $50,000. What is the double entry? Ponds Limited account should be what? It should be debited. Why should it be? Because it is receiving the goods. And the sales account should be credited because it is giving out the goods. May 7, return goods to Alaska Limited, $11,000. Alaska Limited account is receiving the goods, so it should be debited. And return outwards account is giving out the goods, so it should be credited. May 9th, bought goods from Arms Limited for cash, $30,000. So all the double entry. Purchases account should be debited and cash account should be credited. Purchases account is receiving the cash, so it should be debited. Cash account is giving out the cash, so it should be credited. May 12, transfer $70,000 cash into the bank. The bank account is receiving the cash, so it should be debited. The cash account is giving out the cash, so it should be credited. May 12, May 14, Ponds Limited returned $5,000 of goods to Moscow. So you sold goods to Ponds Limited and he's returning. So what are the two effects? We have the return in one's account. It will receiving the goods, so it will be debited. Ponds Limited account is giving out the goods, so it should be credited. May 16, sold goods to Sons Limited, $45,000, paying by check. So when we say check, account, when you hear check, then it means what? It's what? It's bank. So the bank account will be receiving the money, so it will be debited. And the sales account is giving out the money, so it should be what? It should be credited. May 20th, bought printer with check, $30,000. So the printer account is receiving the cash, so it should be what? Debited. And bank account is giving out the cash, so it should be credited. May 22nd, paid Laska Limited $20,000 with cash. Laska Limited account should be what? Debited. And cash account should be what? Credited. Laska Limited should be debited while he's receiving the cash. And cash account is giving out the cash, so it should be credited. May 24, bought van, $55,000 with cash. The van account is receiving the cash, so it should be debited. The cash account is giving out the cash, so it should be credited. And lastly, May 25th, Ponds Limited paycheck, $35,000. So the bank account should be debited, and Ponds Limited account giving out the cash should be credited. So let us look at the journal, the ledgers. So we won't go through all, but we'll just go through some of the examples. For example, this one, May 2nd, Moscow started a business with $200,000 cash. So the effect is what? The cash account is being debited and capital account is being credited. So let's look at the journal entry. So we have cash account. We have capital account. You see, this is the ledger, the T form of account. It has a debit side and have a creditor. Please, I've also made a video about the ledger, so you can also check or click on the link below to go and watch that particular video. So this is it. Let's hear the left-hand side and the right-hand side. The left-hand side for debit entries and the right-hand side for credit entries. And now we have details, amount, details, amount. So the capital accounts is what? It's giving out cash. So it has, as I say, it should be what? Credited. So the A, that's the first one, credited with what? 200,000. We have the date, which is 2nd May. Details, cash. Because the corresponding entry can be found in the cash account. It has been credited with $200,000. And it's the first one, that's the A. So let us look at the cash account. So when we come to the cash account, the same, it has been debited. That's on the left-hand side. So we have date, 2nd May, details, capital. The amount involved, $200,000. A means that is the first one. A. Now, the second transaction, B, May 4, bought goods on credit from Laska Limited, $77,000 on credit. The purchases account should be what? Debited, and the Laska account should be credited. Let us look at the ledger. So we have purchases account is receiving the goods, so it has not debited. So 4th May, Alaska Limited, the date is 4th May. It is Alaska Limited because the correspondent can be found in the Alaska Limited accounts, and the amount is for $77,000 B. That's the transaction B. Let's look at Alaska Limited. So Alaska accounts, it shows 4th May, the details, purchases, $77,000. The transaction fee is giving out what? The cash to the purchases account. C, May 5th, so goods on credit to Ponds Limited. So the accounts are what? Ponds Limited account is receiving the money, so it has been debited. And the sales account is giving out the money, so it has to be what? Credited. Let us look at the transaction. So when we go to the ledger, so Ponds Limited accounts, you see, May 5th, that's the date. The sales, the details is the sales because the corresponding entry can be found in the sales account, and the amount is $50,000. And see, that's the transaction. So as well, it's receiving the cash, so it was debited. To receive the goods, so it has been debited. Now let's look at the sales account. So when we come to the sales account, you see date May 5th, detail Ponds Limited. It has been what? Credited $50,000 because it is giving out what? The goods. Then May 7th, return goods to Alaska Limited, $11,000. The account that happened, Alaska Limited, we have to debit it with $11,000 because it is receiving the goods, and return at source because what we are giving at the goods, so the return at once account should be what? Credited. So let us look at the ledger. So 7th May, it is return at once account because the corresponding can be found in the return at once account, and the amount you got $11,000 has been debited because it's receiving the goods. Then let's look at the return at once account. So return at once account, 7th May, Alaska Limited, 11,000. That's the amount. $11,000. That's the amount. Why credited? Because it is giving out the goods, and so forth. For time's sake, I can't go through all the transactions, but that's how we do the transaction. After the transaction, I've indicated how the double entry should be done, then the ledgers. So all the transactions, I have all the ledgers. So I have all the ledgers indicated with that particular. I've indicated it into bracket that particular transaction, whether it's BAE and so forth. So I've done all the entries. I've done all the entries. So after all the entries has been done, the next thing is that we have to balance the account. Also, I have a video on how to balance or close an account. You can click on the link below to go and watch that particular. So all the entries has been done. The next thing is that we have to what? Close the accounts. So let us look at an account to close. So like I said, you can check my video on how to close it. But closing the account is simple. The first thing that you should do is that look at the accounts. When you look at the account, you look at the accounts, then you add all both sides because it's a debit and credit. So you add all the credit side, you add all the debit side, you add all the credit side. The one that is is bigger, you underline it. Then you bring it also the same amount that you have underlined to the opposite side. Then you carry it down. So when you carry it down, that you close it. Then you bring it down to the next period. You carry it down. The carry down should be what? Should be the last day of the month. So as you see, for example, the capital account, you have 31st May being the last day. It is balance carried down, $200,000, and it has been carried down to the next month, which is 1st June, balance brought down $200,000. Let us look at another example. The cash account. First we total both sides, and total both sides. The debit side is the bigger one, 200,000. So what? We underline 200,000. Then we come here, we write the same 200,000 here. Then we subtract the difference. We add up all this and we subtract the difference. This one is 175. So the difference is $25,000. So the last day, which is 31st May, balance carried down $25,000, which is the difference. It has been carried down to the following month, which is 1st June, balance brought down $200,000, and so forth. So that's how we close the account. So I've closed all the accounts. 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 Close all the accounts to the last one account. You see. Okay. Now we see that the capital accounts, it has been carried down. It has been debited, carried down 31st May to the next one, which is credited 1st June, balance brought $200,000. It means that it is what? A credit balance, because it shows that the subsequent or the next month, it has been credited. So you say that the capital account is what? A credit what? Balance. Let us look at the cash account. The cash account, it has been carried down 31st May, carried down on the credit side and brought down what? On the debit side. So we say that the cash account is what? It's what? It's a debit balance, because the next month it has what? It has been shown on the what? On the debit side. So it's a what? A debit balance. The purchases account, it has been carried down on the credit side, 31st May, balance carried down $107,000. It has been brought down to the next one, which is 1st June, balance brought down $107,000 on the what? On debit side. So we say the purchases account is what? It's a debit balance. So let us continue. I've closed all the account. So let us go to the same thing that I explained. In all the double entries, I have used the alphabet to show the debit and corresponding credit entries. As I said, for example, this one is I. So what you can, when you go to the Ponds Limited, you see I also indicated they're showing you what? The transaction and so forth. That's what I'm saying. Also, all the account has been closed and the balance carried down. As I said, this one, for example, this one, balance carried down. B, balance C stroke D, balance carried down. The date 31st May to the next month, which is balance brought down. Okay, has been brought down, balance brought down to the beginning of the following month, that's the 1st June. Balance carried down, credited 31st May, then balance brought down, debited 1st June, 30,000. That's what I'm saying. The summary of the balance brought down as follows. So after you've closed the account, the next thing is that you write all. So for example, number one, the capital account, which is the first one, it shows what? A credit balance. So you write all down. So let us look at the capital account. Is what? It's a credit balance because the following month it has what? Credited. So you write it down. Then the cash account is what? A debit balance. So you write it down and so forth. The purchases account is what? A debit balance. So you write it down. The Alaska account, it is what? A credit balance. You write it down. The Ponds Limited account is what? It's a debit balance because the subsequent one is being shown what? As balance brought down on the debit side and so forth. So so the capital account is what? A credit balance. $200,000 credit balance. Cash, $25,000 debit balance. Purchases, $107 debit balance. Alaska account, $46,000 credit balance. Ponds Limited, $10,000 debit balance. Sales, $95,000 debt credit balance. Return actuals, $11,000 credit balance. Bank, $120,000 debit balance. Return inward, $5,000 debit balance. The van, $55,000 debit balance. Then the printer, $30,000 debit balance. So after you've done all this summary, it is this particular summary that you use to prepare the trial balance. Now let us look at the trial balance. So these balances are used to prepare the trial balance as shown below. So here is the trial balance. This I prepared trial. The name of the company, which is Monster Limited. Then the date. So this is the trial balance as at 31st May. So the trial balance, it has debit side and we have credit side. This is the details or the particulars as this will say. So this is the details of the particulars. Okay. So that means all debit balances will be written, then all credit balances will be written. So let us go through. So the first one, the capital account, is at $200,000 credit balance. So when we come to the trial balance, we say details or particulars. Capital, it has is what a credit balance will show on the credit side, $200,000. Then the second one, 2, the cash, $25,000 debit balance. So we go to the trial balance. So we have cash. We have cash debited, $25,000. Purchases, $107,000. It's a debit balance. So we come to purchases, $107,000 debit balance. 4, Alaska, $46,000 credit balance. So you go to your trial balance. Alaska, $46,000 credit balance, credited. The next transaction, 5, Ponds, $10,000 debit balance. So Ponds, $10,000 debited. 6, $95,000 credited. So we come to 6, $95,000 credited, showing on the credit side. Seven, return outwards. $11,000 credited. So the trial balance return out was credited, shown on the credit side, $11,000. 8, bank, $120,000 debited. So we have bank, $120,000 debited. Then return invoice, $5,000 debited. So return invoice, $5,000 debited. Then van, $55,000 debited. So on the debit side, we have van. We have van, $55,000. Then the last transaction, that is number 11, printer, $30,000 debited. So we have printer, $30,000 debited. Then when you finish, you have to add up also. We add up all the debit side, and it is what? $352,000. Then the credit side also will be added. Then it's what? $352,000, meaning that the ledger entry arithmetical accuracy is what is correct. So that's how we prepare the trial balance. So how do we prepare the trial balance? First, your transaction, you do your double entry through the ledgers. After doing the double entry through the ledgers, then what's the next one? You close the account. After closing the account, what do you do? You do your summary. I take the accounts one after the other, whatever it is. Is it a debit balance or credit balance? You write it. If you write under details, you write the particular ledger name. This is cash, or is it a debit balance or credit balance? If it's a debit balance, then you write the amount. You go to the next one. You write it. Is it a credit balance or debit? And after that, you use the summary that you've done to prepare your trial balance. Your trial balance, how do you prepare your trial balance? First, you show the date of the company. In this case, Moscow Limited. Then the date, your trial balance as at 31st May. Then you have your debit column, have your credit column. Then you use the summary that you've written down. If it's kappa, is it a credit? You put it under credit. If it's a debit, you put it under debit. When after you've done all the entries, then you total it up. If you total it, that is supposed to be equal. If it's not equal, then it means you made a mistake. You have to go all over the transactions and the ledgers and make sure that you've done the right thing. Okay. So the trial balance indicates that all the debit balances have been grouped together. So also the credit balance, as I said, all the debit balances grouped together, all the credit balances. Each side shows a total $352,000, confirming the double entry principle that every debit entry should have a corresponding credit entry. Hence, both totals being equal, as I said, we total it, then they are equal. Furthermore, it also agrees with the accounting equation that assets should be equal to liability. Why? Because every transaction has to be recorded twice. So our asset, you group all assets and group all capital, it should be equal. All asset is equal to capital plus liability. And so forth. I have, as I said, I have a video on the accounting equation, so you can click on the link below to go and watch that particular video. Last but not the least, the trial balance also has the date of the last day of the accounting period to which it will relate. In this particular example, 31st May, as I said, the trial balance, apart from the name of the firm, it should also have the date, which is prepared. Okay, let's continue. The fact that the trial balance has balance doesn't mean that all the transactions have been rightly recorded. Why? There are certain errors that the trial balance will not show. The trial balance will show, although it will arithmetically show that it agrees, because the debit side is the same as the amount also on the credit side. There are certain errors that the trial balance will not show. So let us go through. That's our lesson 3. Errors not shown by the trial balance. The fact that the trial balance equals each other does not mean the accounting record is accurate. This is because there are certain errors that will not affect the trial balance total, such as, so the fact that it agrees, the debit column is equal to the credit column doesn't mean that all the transactions or all the recordings or all your double entry that be done is what is correct. You might have made a mistake and the trial balance will not show. So let us go through some of the errors. So we have a error of omission. What's the meaning? This occurs when a transaction or transactions is or are not recorded. That's completely omitted and the double entry not shown. So if there is a transaction and it is not recorded, the double entry is not shown. It will never affect the trial balance because it is not recorded in the ledger. The trial balance will still balance. B, error of what? Commission. Though the trial balance is recorded, but in the wrong person's name. That is, though the transaction is recorded, but in the wrong person's name. Suppose a credit purchase in the name of row 1 is entered in Ronald's name. Yes, it will still balance. What I mean is that if there's a transaction and the person's name, it has been entered, the transaction, the double entry has been carried out correctly, but in the wrong person's name. Well, that's what I'm saying. That if the transaction is in the name of row 1, but it has been wrongly entered in the Roland's name, it will still balance. It won't have any effect on the trial balance. Okay, error of principle. This means that where an item is recorded in the wrong class of accounts. An example is a purchase of a car is debited to purchases account. So it implies that although the double entry has been carried out, but in the wrong class of account. A purchase of a car, the correct entry, if it's by cash, the correct entry is that the cash account should be what? Credited. And the car account should be what? Should be debited. Because the purchase of a car is an asset. If car is not what the business part deals with, then if they purchase a car, it's an asset. The corresponding entry should go to the car account. But if it has been debited in the cash, the purchases account, it is wrong, but the trial balance will still balance. Let me go over. There's a sale of a car. The business they deal in selling, let's say, shoes, but they bought an asset by cash. It is a purchase, but it's an asset that has been purchased. So it means that the cash account should be credited with the amount and the car account should be debited. But when the debit entry has been recorded in the purchases account, once the cash account has been credited and the purchase account also has been debited, the double entry has been carried out. The trial balance will still balance, but the entry has been made in the wrong class of accounts. Okay. D, compensating errors. This happens when errors cancel each other. If sales account is overstated by $70 and the purchases account is also overstated by $70, they will cancel each other in the trial balance and will not affect the trial balance. So trial balance total. So it means that if you have, let's say, the trial balance is debit, all the debit entries and all the credit entries. But if you overstate an amount, let's say the amount that has been overstated is what? The debit side, $70, and also the credit side has been also overstated by $70. It will cancel each other out. The trial balance will so balance. It will not balance when the debit side has been overstated by $70 and the credit has not been overstated by $70, then it won't balance. But once both sides have been overstated by $70, it will balance and cancel each other out. So E, original entry error. This is when the original figure is wrong. Your double entry is done using the wrong figure. Example, a sales of $40 and double entry carried out as $80. So when there's an error whereby the amount has been overstated, it's a double entry, credit and debit. So if you overstate the credit entry by $80, then you go also overstate the debit entry by $80. Definitely, although the original amount is $40, but once you have overstated both sides by $80, it will still balance. Although you've made a mistake, it will still balance. So F, transposition errors. This happens when figures position is interchanged and double entry carried out. For instance, a purchase of $45,000 and double entry carried out as $54. It means that the transaction, let's say there's purchases of $45 by cash. The transaction should be, the cash account should be credited with what? $45, and the purchases account should also be debited with $45. But if the cash account has been credited with $55, and also the purchases account has to also be debited with $54, definitely it will balance. Although the original amount is what? $45, but the position has been interchanged from $45 to what? $54. Definitely it will not be shown. Although it's a mistake, it will not be shown in the trial balance. It will balance. Because why? The position of the figures has been interchanged. Then the last error, complete reversal of entries. This is where this is where the correct accounts are used, but each item is shown on the wrong side of the account. For example, transfer of cash, $300 to the bank. The double entry should be credit cash, $300, and debit bank, $300. If rather the cash is debited $300 and the bank credited $300, this will not be reviewed by the trial balance. So although the double entry has been carried out, but it has been done wrongly. So for example, transfer of cash $300 to the bank. The correct procedure is that what? The cash account should be credited with what? $300, and the bank account should be debited with $300. But if you do the opposite way, that the cash account is being debited with $300 and the bank account being debited with $300, it will definitely not be shown. Although you've made a mistake, it will still balance. Okay. Though these errors will not affect the trial balance to task, in future we will learn how to treat this type of errors. Yes, though it will not affect the trial balance, so the trial balance will still balance. But when you are going through your ledgers and you see them, you have to correct them. There's a way that we correct. In future, I will do a video on that particular one. So let us go to the lesson number 4. What is the purpose of a trial balance? Apart from it being used to check the mathematical accuracy of the ledger entries or the transactions, the main purpose of a trial balance is that it is used as the basis for the preparation of the profit and loss account and the balance sheet. So all that I'm saying that apart from it being used, there are so many numerous ways, or there are so many ways that whereby we can use the trial balance. And I've given 2 examples here. One, use it to check the arithmetical accuracy or mathematical accuracy of what of the ledger entries, as you saw in the trial balance. Apart from that, it is the basis for preparing what the end of the month or end of the year trading profit and loss account, and also the balance sheet. Well, we have come to the end of our lesson. Let's look at the learning account. So our learning accounts are what? You have now learned A, how to prepare a trial balance from a set of accounts. B, why the debit and credit trial balance total should be equal. C, the types of certain errors that cannot prevent the trial balance from balance. Then D, the use of a trial balance. Please, we have come to the end of the video. Thank you very much for watching. What I would suggest that you should do is that accounting is a principle. And as a principle, the more you watch the videos, the more you become familiar with the principle and you understand. So you can record this particular video and watch it over and over and over, or you watch it as many times as you can so that you really understand it. Secondly, practice a lot of questions, because practice makes man perfect. Accounting, if you want to really be a good accountant, you have to practice a lot of questions. So practice, you have to go and look for more questions and practice. If you need more questions, you can contact me through my email by the link below. Also, please, I want you to like and share this video to friends in order to encourage me. Comment on it so that I can improve upon the performance. Subscribe so that the weekly videos that I'm going to do can be sent to you. As I said, I'm an ACCA chartered accountant, and I provide bookkeeping and other accounting services, including tuition. So if you need somebody to keep your book for you, you can contact me by my email. Also, if you need somebody to teach you accounting, you can also contact me. Thank you very much for watching. Please look out for my next video. Bye.